Oh boy, oh boy, oh boy, back to work. I know, I couldn't stay away that long, right? You guys missed me last week. I missed you guys last week. Hope you all had a fantastic week. But it's back to work today. Back to work Monday evening already. We're getting ready for Tuesday's trading session. Got a bunch of great trades setting up on our radar for tomorrow. Got some big news, got some earnings. Got a lot we're going to cover here tonight on this video. And as always, you know how we do it here tonight. I'm going to cover all my favorite trades in tonight's video that we have a game plan to make some money tomorrow. Before we jump in and get this party going tonight, make sure you subscribe so you don't miss tomorrow night's video upload. And as always, if you guys enjoy this video, hit that like button for me. Appreciate you guys supporting this YouTube channel. But enough of the intro, right? Let's get back to work. Tuesday is not going to trade itself. And boy, oh boy, I'll tell you, it was strange last week not having you guys with me here on the newsletter last week. I missed you guys here. Going to be back here for the third week of July. Where do we go here for tomorrow? What's going on? Boy, I'll tell you, there's a lot of ranges on these charts for tomorrow, right? Range on the Nasdaq, range on the S&P, range on the crude oil. I love me some ranges, right? If you're a member of mine, you know we love ranges. Ranges are magnets. We're buying low. We're selling high. We're trading failures. We're trading breakouts. But I'll tell you, get some big news for tomorrow as well. So we're going to talk about the best way to trade these ranges. Get a bunch of different trades I'm tracking for tomorrow. But speaking of tomorrow, before we jump into each chart here tonight, though, let's just make sure we're kind of all on the same page for tomorrow. There are really two things you want to be aware of. And of course, we got the FOMC announcement coming on Wednesday. The big question this week is not will they raise rates. It's basically will they raise them by 50 basis points or 75 basis points. I think that's kind of the only question lingering here right now. So the big news of the week is definitely on Wednesday. But coming into tomorrow, though, we have the consumer confidence number and that new home sales number tomorrow at 10 o'clock Eastern time. Remember, 10 o'clock Eastern time is a very, very popular time for trades in our trade room. 10:10, 10:15, 10:20. So I always love it when I see some big juicy news reports coming out at 10 o'clock Eastern time tomorrow. So definitely keep your eyes on that as far as a catalyst for tomorrow morning. And then speaking of juicy trading opportunities for tomorrow, we got more earnings coming this week. This should be kind of not the end of it, but kind of the climax of the earnings season. We got week 3 here of earnings. Tomorrow, you'll notice a lot of names that should look familiar, right? Tomorrow, before the open tomorrow, UPS, Coca-Cola, General Motors, General Electric, McDonald's, right? Just a few tiny companies, right? Reporting tomorrow morning. That definitely has potential to really kind of change the game a little bit, or at least change the mindset of the market going into tomorrow morning. And then, of course, we'll talk about this tomorrow night. We get a bunch of big news. Just a couple big reports coming out tomorrow after the close. So we'll talk more about that, obviously, tomorrow night in tomorrow night's video. But again, those earnings are, they're kind of a big deal for us because they may really shake things up in the pre-market. And so we'll do our best to get ready for them tonight, but obviously going to keep, be aware tomorrow before the open. We may have a change in sentiment as we go into the market's opening bell here for tomorrow. So 10 o'clock Eastern time is that major news, home sales, consumer confidence, and we'll definitely be watching to see kind of how this thing shakes up tomorrow with some of those big names coming out with earnings in the pre-market. It could be a pretty busy start to the session tomorrow morning in our trade room. All right, back to our charts though, guys. Whether you trade one of these markets or you trade all of these markets, you better watch this thing all the way to the end here tonight because you'll learn something new throughout the entire video. I'll provide different trade ideas, different variations, different advanced tactics as we go deeper into this lesson. So I'll give you a reason to stick around all the way to the end. Let's go Nasdaq, S&P, and crude oil. Let's jump into that Nasdaq or the micro Nasdaq or the QQQs. This is a 4,000 tick chart on the Nasdaq. All of these charts tonight will be tick charts, and you can always see the time frames listed in the upper left-hand corner. There are 3 key insights on this Nasdaq telling me where the best trades are likely setting up for tomorrow. First things first, get a strong move lower. That strong move lower as we saw the market pop up and then dump back down at the beginning of today's trading session. Why is it important? Well, because at this point we have that strong move down into that 10 o'clock hour, and they just recently retested that low. We know that anytime we see a strong move in one direction, we know that in this case, the sellers are going to want to sell high for a retest of that low. What do we always say? We always say mission accomplished. So anytime I have a really strong move in one direction, I always try to focus on trading in that direction until we retest that low. So now we've retested that low, which basically means the buyers have one thing on their mind right now, and that is to take out that high and possibly take out today's big high at this point, right? So we'll keep an eye on that's one important part of this for tomorrow. Next one is a trading range or a bearish trading range, right? Strong move down into a range. Now, why is a range important? Well, because ranges act like magnets. And so my job as a trader is to find levels of support below and buy off support back into the range, find levels of resistance above, prior swings, trend lines, resistance levels above, and sell resistance back into that trading range. Ranges act like magnets until we see a breakout, which leads me into now the third key insight for tomorrow. If this is a trading range and we run below the range and we begin to rotate off of that low, oftentimes the amount we go below the trading range is equal to the amount we go above the trading range. And you can see that's going to be a great level of resistance because it also lines up with this kind of hidden channel, this trend line up here. So definitely gives us a lot of resistance. But what's the big thing about this though? Momentum. As the market rotates off of that low, this is not going to be a very bear market at that point, right? At this point now, the sellers can definitely come in and sell off that high, absolutely. But you got to be thinking at this point now, with this rotation off the low, this could blast. It could really, what we call slingshot reversal back up to, again, potentially take out these highs and potentially maybe even keep going there up to a larger pendulum swing area, up to some big targets up overhead. Now, obviously, we got to wait and see on that, right? It might be a little bit ahead of myself for that big reversal here, but that is the potential when we rotate off the low of a trading range. If these bears, if they can't hold this thing back, oftentimes these things really snap. And remember, we got some big earnings reports tomorrow morning. Everyone's wondering, has the Fed killed this economy enough yet with their rate increases to warrant a smaller rate hike? So there's a lot of variables going into this session that could produce a bit of a short squeeze. So how do we trade this? Where are the best trades here right now? Well, as the market goes lower, buyers can definitely look for a reversal back up into that trading range. As we go lower, sellers have to be a little bit careful down here because that range acting as a magnet. Bears will have to look for a breakout going lower, and don't you worry, I got a couple of breakout patterns for you guys up my sleeve here for tonight. I think the really nice trades that will be if the price goes higher, because as we go higher, we can sell it back down again, or really as we go higher, we might get that real punch and get that slingshot reversal going higher here as well. So where is how do the buyers want it? How do the sellers want it right now? As we go higher, right? Let's talk about if this market goes higher here, and then we'll work on as the market goes lower here right now. And keep in mind, this is a rare occasion where the S&P is quite different than the Nasdaq on this. The S&P and the Nasdaq are usually quite similar. Not so much in this case right now. So as we go higher here right now, how would I sell off the high? The concern is momentum. That's the concern. We have tons of resistance up overhead here. Fantastic, a buffet of resistance, but momentum is very bullish. Now, watch the sequence, okay? This is the sequence that you want to watch for at these highs. As we go higher here, what's going to happen is all that bullishness will have the buyers beating their chest. They're going to think this thing's a reversal. And so you have to get some sort of edge over those buyers. And to do that, we need to use their stop losses as fuel because we have all that momentum going higher. How do you do that? Let them try. I like to use the 2-try rule off that pullback. Once the buyers try twice, remember, it's an overall bearishness, but that rotation gives those bulls a lot of momentum. Once those buyers try twice here, now think about where are their stops? Where's their pain? At this point, we're in a great spot for a short, but we have a lot of momentum. So we got to rope in those buyers and use those stop losses as fuel for that move going back down into that trading range. And then don't forget, once we get that nice juicy signal and we get that short off the high, as we begin to roll over and go lower, your job ain't done yet. Now we can go out and mark off a new trend line off these lows, bring it up around these highs. And as I always say, look for that first test because the first test is always the best test. Now you'll notice how I'm drawing this up here right now. I love traps off the top of this channel. So again, it's a 2-try failure, and then look for that little, look for those prior swings and try to get those what we call trap setups in our trade room. Could be a trap setup, it could be a failure setup, it could be a pullback setup. Now, real quickly, I know that most of you guys and gals watching this video right now, you've taken our free trading course, you've learned how to draw the ranges, the channels, you know how to time these entries, these failures, these traps. I'm always so amazed how well you guys do making money with just a free course on our website. But listen, if you're here for the first time, if you haven't taken that free trading class to learn all these entry techniques, what I'll do is I'll quickly here put a little link up here for you in the upper right hand corner. Grab that link and take the free trading class. The strategy I teach in that class, we call it the 3-step strategy. It'll teach you all the entry techniques so you'll know how to take these trades. In fact, that roadmap I teach in there is great for helping a part-time trader transition into a full-time trader. If you're sick of taking losses or you're missing too many good trades right now, if you're not getting the results out of your trade in that free trading course, we'll get you back on track here. No doubt. So grab that free course link upper right hand corner and you can learn those setups. So as we go higher, right, we know that failure into that new channel and that dump back down into that trading range. At what point though do we start looking for the long side as we go higher here? There are, for the most part, there are really 3 basic kind of reversals or basic breakout patterns I want to use here right now. You ready? Here's the first one. The first one is, let's say this thing just takes off to the upside, right? We open up in Asia, the market blasts higher. We see a strong move. We see a shallow pullback, and we see a higher high in price. Okay, this is always an easy giveaway for a trap. Okay, we call these 2-try traps or 2-try reversals in this case, right? See how it looks like right there? Strong move, shallow pullback. The shallow pullback is key because it drives the pullback traders crazy because they can't get into it, right? Not any pullback. And the higher high, that basically confirms it's not going to be a 1-2 back down again, right? So that's called a 2-try trap or a 2-try breakout. One of my favorites going higher here. Now, that would be if it really strong pop. Oftentimes what happens though is it'll pop up, it won't look really strong, but it will start to grind. As the other side of the market, in this case the sellers, as the sellers begin to exit their positions now, we begin to grind. And this is very easy to see because it will separate and almost stubbornly hold away from that moving average. When you see one of those pop and grind channels, okay, what we'll do is, or pop and grind moves, is find that new trend line off that high, bring it down off that low or that low, right? We'll have to see which one lines up better when we get in the chart here. But you want to go looking for a bigger channel on this, okay? And then again, at this point now, look left, find some of those prior swings and try to get underneath that prior swing. What happens a lot of times is it'll pop, it'll begin to grind, and go higher here. I'll draw that trend line off the high, bring it down off that low, mark up those prior swings, and then wait for that pullback. Once it pulls back and touches the low of that channel, if I'm below a prior swing, I can grab a trap. I'm almost always below the 21 moving average. I can look for the bears to come in and try to sell off the moving average, right? It's not a bear market any longer. It's that pop and grind reversal. At that point, we know exactly where their pain is, and we can buy right into those stop loss, right? Into those stops here. Now, think about it this way. The size of that first pop leg is oftentimes the size of that big target going higher here. So we don't know enough yet, but if it pops and grinds, find that pop leg, right? That initial kind of pop leg, and measure that one, and then bring it right off that low, and that will almost always give you a really good area to take some profit as we go higher there. And then, of course, last but not least is kind of the easiest one out of the group, and that is the 1, 2, 3 breakout, or the 1, 2, 3 reversal. Now, at this point, we know the buyers want to take out that high, right? So what you want to do is you want to get up at least into that high, see a pullback to the moving average, and get a jump off that moving average. Okay, I call this a 1, 2, 3 reversal because it has 3 legs to it, right? It goes up 1 leg, pulls back 2 legs, and 3 is a jump, a very strong jump off of that moving average. Now remember, it's not enough to simply try. It's not enough to simply go up, pull back, and try. It has to really pop because, again, it is an overall bearish environment right now. So if I can get this thing to pop off that moving average, now what I'll do is I'll go in, mark off the top of those, right, of those candles, find that low, mark up those prior swings, and again, I want to get any of the entry setups that we teach in that free trading class, that trap, that failure, that pullback. And then again, think about it, right? That first leg, and that third leg become symmetrical and can be used as a target as we go higher. Okay, so keep that stuff on your radar here. Now, as we go lower, how do I buy this thing back up now? How do I sell it as it's going lower? That's a great question. Why don't we answer those questions on the S&P, right? Because everything we talk about right now going lower will also apply to the S&P 500. If you guys enjoyed the video so far, by the way, hit that like button and let me know if you guys have any questions for me in the comment section. Over here on the S&P now, you'll notice the S&P is quite different than the Nasdaq. Very obviously not a nasty range, but a very sideways neutral trading range. This is a 10,000 tick chart on the S&P 500. There are 3 basic key insights that are telling me how to trade this thing here for tomorrow. One is this completely neutral trading range. There's really no directional bias at all on this chart, which, just to be aware of this is pretty rare. We don't usually see just straight up flat markets like this. Most markets with a range are going to be some sort of directional bias. So just be aware of this. We probably only see 10 of these a year, right? We don't see a lot of these completely neutral trading ranges. And basically what it means is I can buy low, I can sell high, and pretty much the same effectiveness, right? There's no directional bias involved here. So of course the range is right here, you can see that, and ranges act like magnets. So the reason why this is important is because, well, I want to find levels of resistance, right? Like trend lines, like swing lines, like channel lines, right? And we sell back down in. I want to find levels of support, like trend lines, like swing lines, right? You get the point, right? I want to go down and buy it right back up again. Okay, or trade the breakout. We've talked about a couple breakouts here so far in this video. What else are we talking about here? The second kind of key insight is rotation off the low. Okay, remember, as we go into a trading range and the market leaves the range, doesn't break out, right? Doesn't break and hold, okay? Doesn't pop out of that trading range far enough. Now as it rotates back higher, where does it want to go? It wants to take out some of these other levels, right? Take out that level, take out the pendulum swing, take out that high. Why is that important to me? Well, because as we rotate off of that low, that's going to be a lot of bullishness, right? This is not going to be a neutral market very long if it rotates all the way back up and takes out some of these big highs up here. That's a big, big clue, because if the bears want to sell off these highs up here, they better be a little bit more patient, and we'll cover that here more in a moment. The third piece of this is not, I want to put 3 on here. here, there really wasn't a lot more to talk about on this one, but expanding triangles. Now, expanding triangles, if you're one of my students in our trade room, you know these are really popular in my trading strategy. What I'll do, though, is I'll go back to the beginning of the range and start to look for how can I draw triangles, right, across those lows, across those highs. And obviously, if the range is a magnet, we can use those triangle levels as levels of support and resistance. Most importantly, though, notice how the rotation works. We go from the low to the high to the low to the high to the low. If we understand that ranges love to rotate back and forth, it makes sense the market now would want to run back up to the opposite side of this triangle. Now, why is that important? Well, because what if the market just runs lower? What if we don't go higher? What if we don't make that rotation? We call these failed rotation, and that's a big sentiment clue. It's not a very bullish clue, is it, right? It's a very bearish clue if we don't go higher here right now. That'll basically be a failed rotation. So knowing all of this now, as we go higher, we have the same potential breakout, the same potential snap and slingshot that we had in the Nasdaq. As we go lower, though, now we have to be careful because we definitely see that failed rotation. For whatever reason, if we're not finishing off the retest of some of these levels up top here, we have to assume this market is a little bit more bearish than I might at first have known. And so as we look to buy off this low, we got to be patient, right? Use that 2-try rule to buy it, or potentially a breakout going lower. Keep in mind, these will all apply to the Nasdaq as well. So on the Nasdaq, we talked about that pop and that 2-try trap. We talked about that 1, 2, 3 breakout. We talked about that pop and grind. All those same patterns will apply on the Nasdaq. And we also talked about that move up and that 1, that 2, that drop, find that channel, and then back down from there. All of these are still going to be in play on the Emini as well. Okay, so everything we talk about going on the NASDAQ, you can pretty much just copy and paste over here to the S&P. I'm not going to go over those again here. I won't bore you guys with that. Now, as we go lower, great place to be a buyer, right? We're at support, below the trading range. But what's the problem? Momentum. But I thought it was a neutral trading range. Why is there momentum at play here? Because of that failed rotation, right? This might be a big channel, you know? This might be a bear channel. You can kind of see it, right? There's a little bit of a tone to it there, that bearishness. So whether you want to call this a bear channel or you want to call it a failed rotation, as we go lower, think about that same reversal. Okay, we take out that low. Now, if I want to be a buyer down here, what do I need? Okay, if I want to be a buyer in kind of a bearish environment, I need 3 things for a reversal. What were they? And this is going to go back to a few weeks ago on our video. The first one was what? It was a major turning point, right? Major turning point is one key component to a reversal, right? Second thing is we need signs of exhaustion, okay? Signs of exhaustion. And the third thing, as we're on space here, is we need some sort of catalyst, right? Some sort of edge over the other side of the market. And to do that, we're going to run those stops, right? This is how we can make money consistently trading reversals. Make sure we combine them at a major turning point, look for signs of exhaustion, and then make sure we have some sort of catalyst, right? My favorite catalyst is to be buying when the sellers are caught short and they have to exit for a loss. So as we go lower, we're at a major turning point. Now let's wait for those signs of exhaustion. This is where that 2-try rule comes in play. Now keep in mind, you're going to learn a lot of variations of this 2-try rule in that free trading class that I mentioned earlier, right? That free trading course I linked up there in the upper right-hand corner. When you take that free course, you're going to see me applying these 2-try failures in a lot of different ways. I'm not going to go over all the variations right now, but you're going to learn more about those in our video class there on the website. So bottom line, though, is we're at a turning point. Now look for signs of exhaustion. And then think about, where can I get a catalyst? Okay? Catalysts are pretty simple. Stops, baby. Run those stops, right? Think about where the stops are going to be for those bears and plug it right in to that area there, right? We want to buy off the area. I like to grab trend lines off of that low, look for traps off of that low. You'll learn more about that stuff inside that free trading course. Now, once we get that failure, right? Once that failure starts to pile up, now as we go higher, it's all going to depend on how this thing sets up, because we have that trend line coming down overhead. Ideally, I want to find the re-entry on this, the add-on to this, before we take out these trend line highs on the opposite side of this trading range. I'm going to mark off that trend line. I'm going to find that channel. I'm going to look left, find those prior swings, and repeat after me. First test is the best test. First test is the best test. I want that first test off that channel. Now, again, I love traps. This could easily be a seller failure off the moving average into a pullback combination. If that means nothing to you, it will soon mean a lot to you when you take that free trading course I mentioned earlier. Traps, failure, pullback combo off of that low. Okay, this is the same idea of that short off the high, right? Except in this one, though, because we definitely have the potential for there to be this channel coming down here, I do have a little bit of our, timing will be important on that reversal coming off of that low. I like that option a lot as we go off that low. And then as we go lower here, what do you think for a breakout? What do you think? Well, really, when it comes to these types of breakouts, there are really two of those three patterns we talked about earlier. So, for example, we take out that low. We pull back to the moving average. The bears come in and they blast, right? They jump. And we're not looking like this, right? We're not doing something like that. Remember, it doesn't matter how strong that first leg is. Okay, we see a lot of really, look at this one, right? We see a lot of really convincing legs down, but then sure enough, they come right back to that moving average and see ya, right back up into that trading range. So be very careful being convinced on that breakout leg. There's a rule of my trade: I never trust a breakout. I never trust the breakout leg. Now, if they can pull back and they can jump off of that moving average, okay. Yeah, and trust me, I hate missing that trade too. Right? I don't want to miss that trade, but the problem is trading is a game of probabilities. The odds are not in my favor on that one. Okay? You got to be comfortable with, I always tell my students, even a broken clock is right twice a day. Even the worst setups are still going to work from time to time. You got to be okay with saying, you know what? I missed that one. I'll get it next time. Right now, 1, 2, 3 breakdown, mark off that low. You got it. Mark off that high. And then again, we'll drill down and we'll find those traps. We'll look for the price to pull back above the moving average, get those buyers coming in, and so we can use those buyer stops, right? Use their pain as targets as well, as entries as well, right? So again, it's a 1, 2, 3 breakout. Think again about that breakout leg, right? That first leg and third leg acting as a target as we go lower. We do have some big numbers though down here. That 39.22, that 39.09, 39.10 area down there. Those are definitely some big objectives here for me. We'll know more tomorrow once we get that breakout going lower. We'll know kind of what those first leg, third legs look like, and we'll be able to time that better from there. I'm not a huge fan right now of that 2-try breakout. The 2-try breakout here is a bit of a gamble. That's the one I don't like on this one. I like the 2-try breakout as we rotate off that high. You oftentimes see those strong pops, shallow pullback. I like them when you have that momentum just winding up, right? Strong move, shallow pullback, higher high. I like it going higher, but going lower though, it's not the right fit for this. So if we do see a pop down and they begin to pull back, but they don't pull back and pop, they pull back and grind. This is one of my favorite channels, or my favorite trades these days, this pop and grind, these pop and grind channels we call them in our trade room. Pop and grind, draw that trend line, mark up off those big highs, right? I know this seems kind of foolish to do it like that, but I'll tell you right now, this is how most of them need to be drawn there. They won't usually be this wide, obviously, right? They'll be pop, kind of grind down like this. You'll get that trend line down off those lows, bring it up around these highs. And again, the grind is the giveaway because it tells you the opposite side of this is basically walking away. Then what I can do do is I can mark off those prior swings, get above those. Again, you want to get above those prior swings if possible, because that's what professionals are waiting for: traps, for failures, for pullbacks as we go there, right? Think about those levels there at 22, right? Think about that level here at 39.09 and 3/4. All right, guys? Now, obviously stay out of the middle, right? I mean, not obviously, right, but stay out of the middle, right? The middle of the range is where good trades go to die. Now, here's a question for you. Here's a question. What if, could we possibly break out and then snap right back up into that trading range, right? Get a bunch of support down here. Is it possible we can play both sides of this market, right? Get the breakout going lower and then snap it right back up into that range, middle to late of the morning or early afternoon tomorrow? That's a good question. Let's talk about that now on the crude oil, because crude oil has one of those markets right now that could easily break out, get you some money on the way down, and then snap right back up into a range again for tomorrow. So that could easily set up here on the S&P and the Nasdaq as well. So let's talk about this. Last but not least here on the crude oil here tonight, there are really two basic insights to oil. This is kind of a straightforward chart tonight, not very difficult in this one. The first one is a very important clue for me, and it should be for you as well. Anytime we see a strong move in one direction, what do we expect? We expect a pullback and a retest of that high. Now, at this point, where do we go next? Do we break out and go higher? Possibly, dare I say, don't hate me for it, back to 100 maybe, right? We're only a couple bucks away from $100 a barrel. I know I hate it too. My car hates it too, right? But hey, that's the way it goes, right? We can't let that bleed into our trading activities, right? We're going to be very impartial. We can't let the price of oil impact our decisions right now. I know it ain't easy. So that's one option. Or we may end up pulling back, and where might they want to go? Yeah, back to that low. Right? And that creates what? One big trading range. Okay, so this is a very big clue. Why is it a big clue? For me, it's a really big clue for me right now because at this point, remember, we really don't want to sell against that strong move. But once we have the strong move and being retested, now we have options here right now, right? Now we have options. And of course, the second clue is this trading range, right? The trading range is very, very important. Why? Because ranges act like magnets. So levels of resistance above, levels of support below, we want to sell high, want to buy low. We want to trade breakouts, right? Possible breakouts going lower here. So how do we make money in this market for tomorrow? We've got just enough time before the inventory report on Wednesday, the Fed day on Wednesday. As we go higher here right now, okay, as we go higher, you're going to see a lot of the same stuff on this one because we got plenty of options as we go. The biggest one right now is we do have some resistance up top here, of course, as we go higher. So we do want to see a pretty good punch going higher here. So for example, right, let's say we do get that pop up, that pull back, and that blast going higher. Get this thing a little bit lower here for us, right? What if we do jump up, pull back, hold that pullback, and jump right on through this overhead resistance? That's a 1, 2, 3 breakout. You got it. Mark off that high, mark off that low, find that trap, and again, right, whichever of the entry patterns we get our hands on off of that low. First leg, third leg. And you know where that puts us? It puts us right about $100 a barrel. That's our next major area of resistance, from 100 to 101 to basically 102.24 up there and change. Or do we see a pop and grind? That pop and that grind going higher. Mark off that trend line. Find that channel. You know the drill on this. Grab those traps. Failures, pullback combos. You'll be amazed how easy these are when you take that free trading course. You'll know what to look for. And then, of course, the third one is the one that really has to show us, right? They have to really rip. This third one has to really rip, right? Strong move, shallow pullback, higher high in price. You don't want this one right into these highs. Make sense? Right? So this one's going to rip, really has to rip there. And then once we get that strong move, that shallow pullback, that higher high in price, traps, baby. Easy, easy, easy as we go higher here, right? Now, how would I sell it as we go back into that range? What's my problem? Well, we know we have resistance up there. This major resistance with a range down here. The problem is momentum, right? Momentum is the big problem. So as we go higher here, the best way to sell a bull market that breaks out of a bullish range, right? A lot of bullishness in that description. What you want to do is look for a double top reversal. Okay, look for that pop up. Wait for those buyers to come in. Let them retest their high. Okay, this is the safest way to do it. Again, we're very bullish at this point. And to be a seller now, we do is we use that same 1, 2. Remember, we're at a major turning point now. We get a strong move. It's been retested. So now all of the buyers now coming in now. Remember, the smart money's buying right there. Right? This is the dumb money, right? This is the new traders, the inexperienced traders out there. They haven't learned enough yet. And so they're coming in with their small stops, their small account sizes. They're trying to force that breakout. Their stops are just waiting to get lit up like a Christmas tree, and they can run those stops for that reversal back down to where? Probably back down to retest those lows down there. Right? Now, at this point now, again, strong move. Retest the high. Very important for that reversal off the high here. 1, 2, and get that nice juicy signal for that short going lower. As we go lower now, find that new channel off that low. Mark off that high. Grab that what? That first test, right? This could be a trap, a failure, a pullback setup. You'll see hundreds of examples inside that free trading class on the website, and we know where it wants to go. It wants to take out that low, right? So far, so good on the upside. Now, as we go lower here, you know the problem now. I want to be a buyer down here. I do. I really want to buy down here because, again, we're so bullish with a range. We have an expanding triangle. This is a great spot to get long. But what's the problem, though? Rotation off the high, right? We've already talked about rotation. There's a very big difference. There's a very big difference between a bull market into a trading range that pulls back like this, right? I can get very aggressive on that entry. Right? I can be very aggressive buying into stops if all I have is a bull market or trading range. But the minute this thing starts going higher and then rolls back down again, that's where things get dicey. Because now that momentum that turns over, you can see it, right? It's not the same situation. So now as we pull back now I'm thinking, shoot, these bears are going to try to hit this thing and snap this thing out of that trading range. Is exactly where the exhaustion comes in with that 2-try failure, and we're buying it right back up from there. So as we go lower here, I love the long side here, but again, I don't love momentum. I love the location. It's a great spot to get long, but that momentum makes it a challenge. So let them try twice. Right? Get that edge, because that's what's going to give you that edge, right? That's what gives you that edge, that advantage over the other side of the market. You're at a major turning point. You get signs of exhaustion, and then you can use those stops as your catalyst for that run back up into that trading range. I like that trade a lot. Right? That could be one of the best trades for tomorrow. And then again, as I kind of teased you with on the S&P, what do you think the odds are that we get a snap back to those lows and then back up into that trading range? How exactly would that look for tomorrow? Well, first of all, we're going to begin with taking out that low. Then the bears either going to hold that pullback and blast. Okay, that will give you that 1, 2, 3 reversal, 1, 2, 3 breakout in this case. We're going to mark off that low. We're going to mark off that high. I know it's scary. Because there's support down here, but you have all of that momentum now for the bears. And just like all of that momentum for the bulls wants to retest the high, all of that momentum for the bears will want to retest that low. So now we look for that first test. Right? Grab whichever of the entry patterns we can find off the top of that channel, right? Take our profit off at that low, and then look for that same 1, 2 failure into that new channel and rotate it back up again. Or maybe it's even easier. Maybe we punch out those lows, we pull back, and the bears begin to grind and grind and grind. Even easier. Right? Even easier, because that grind is the giveaway. At that point now, we're marking up that low. We're marking off that high. You know how this thing goes, right? Find that trap, that failure, that pullback. Take some profit off at that low. Okay, nothing new there. And then again, if we find our way all the way down to these lows again, this is exactly where we're at a great turning point with a big range, big juicy round number ahead of us here. Now again, we can't just buy it down here because there's so much momentum for the bears. So let them try a couple times. Let them try once. Let them try twice. Maybe we get lucky and get that crown reversal, that trap below that low. Bears once, bears twice. I see you. I know where those stops are. I know where that pain is. I know where those bears are trapped, and I can use those stops for an edge. Then as we go higher with that failure, I can then look for that new channel. And this, of course, is where things get really fun because this could easily snap quickly all the way back up, not just into that range, but it go all the way back outside of that trading range. So I like that a lot. And I would think this could also be setting up on the S&P tomorrow too. Okay, keep this little sequence, again, get that breakout going lower and then take out that low. Signs of exhaustion will give us that edge that we need. And then as the market starts to turn higher here, we're now looking for traps. We're looking for pretty much any of those entry patterns as we try to snap back up into that trading range. All right, guys. Hopefully by now you've learned a lot here tonight on this video, and hopefully tomorrow you'll use this strategy, this information tomorrow to make some money on Tuesday's trading session. Now, speaking of Tuesday, the best place to come out and learn and trade along is in our trade room. We open up every morning, 8 o'clock Eastern time. I would love to have you with me there, trading right along, learning along with us here. If you like this video, you're gonna love our free trading class. You'll love our members trade room every morning at the opening bell. I'll put all the free class links. I'll put all the membership links. Grab the free course first. Learn the basic strategy. Get that working on your own. I'll be here though, ready for you when you're ready to take that jump up the next level and come join me as a member of our trade room. Any questions here? Any questions? Don't be afraid to post the questions in the comment section. You can always call that phone number here for our office, and we got live chat here anytime you need help here on the way. So don't be a stranger. If you have questions, we're definitely here to help though. So let me know if I can help with anything here in the comment section, or simply call me in the office. I'm always here. All right, guys. Great lesson for tonight. Tomorrow the fun begins, 8 o'clock Eastern time in our trade room. We got a great plan. Now all we need is to go trade that plan for tomorrow. Hopefully I will see you there at the opening bell tomorrow. If not, you better come back here tomorrow night. We'll go back and do it again tomorrow night. Get ready for wacky FOMC Wednesday. We'll see you guys same time, same place tomorrow night on this YouTube video. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.